All right, let's get into it. So let's.
Maybe people just have a bit too much time on their hands. Maybe it's not us.
Yeah, well, it's good to be entertaining, and if you can give some people some good insights that could save them some money, or maybe even make them some money, it's good. So let's talk about tax law silly season, Vukasin. Like, I do my annual list. I've done it for 9 years now. I did that a couple weeks ago. Just kind of interested to hear your thoughts on this time of year in the junior mining sector. How do you view it? How do you play it? And was this year a bit odd because there weren't so many stocks that were down 90%?
Yeah, I mean, let's start from the back, right? I think this year has been very odd, right? I'm not sure that I'm not sure if there has been anyone who is, let's say, has predicted, quote unquote, a market as good as this. And so yeah, I think we might be having it a bit too good right now. I can't say I'm going into next year kind of negative or thinking that it's going to shift and do a 180. Everything that goes up goes straight down, or goes up a lot goes straight down. But yeah, there should, like, tax law season is not really a topic this year that much, I think. And for me, generally, to be honest, like, it's not something I pay too much attention to, other than the typical stuff I do at the end of every year, and that's try to prepare for next year. Pretty much every year as Q4 starts, you're already with regards to the companies you may own, you may want to own, you may be looking at, you're pretty much already at the they're done. You're getting ready to wrap up the year. And the last time we talked, I told you I track my stuff just because of I think it's orderly and I think it makes sense. I track my stuff and I do my stuff on a calendar year basis. You do the returns, you figure out what you may want or may not want to own, i.e. sell. So yeah, I pretty much, irrespective of the tax law season, I do the same stuff. And yeah, of course, this year I don't think there are quote unquote cheapies to pick up that people might be overselling just to realize the losses they might have had. And yeah, I don't really think it's a big deal right now.
Yeah, I mean, it's not a big deal, but don't you agree there's always some opportunity around this time of year, because there's always going to be stocks, companies that didn't have a good year, despite the
Right.
overall year in the sector, and that
Yeah.
can create some real selling pressure with buyers really stepping back, and it can create some real opportunities, don't you think?
For sure. No, definitely nothing to say against that. But would you? I mean, do you have a practical example in mind? Because I don't. I mean, we mentioned that we were going to talk about Emerita as well. So maybe Emerita is a tax loss, a candidate. But in terms of opportunities and something that hasn't done spectacularly well this year, and say maybe is lagging, I would say in principle definitely yes. But do you have any practical examples you would bring up so I can fully agree?
Well, look at my list. GSPR, very quiet year, didn't really
Right.
generate much news flow, very tiny
I'm not
market
sure I know
cap.
the name actually. Right.
Strike
It
Point
is a
Gold.
that's a nano cap.
Yeah, so it's
Yeah.
basically like, if you look at my list,
Mm-hmm.
also ramp metals, right? So that's
Uh-huh.
like an Emerita kind of situation where the stock got nuked on news, and actually in the case of ramp, it's been down for like 5 months now, right? It got nuked in
Right.
August, and it's just been grinding lower, right? So that's a very oversold stock that did not follow the sector at all, because it diverged from the sector in such an extreme way in 2024 on a new discovery, or what appeared to
Right.
be a new discovery. And then all of that came undone when they didn't hit in phase 2 at Ranger, right?
For sure. And if I recall, I'm 99% sure that it was ramp that I also discussed with you and not with somebody else
Yeah, it
about
was.
half a year
It
ago.
was.
So
Yes.
yeah, I'm pretty sure it was. And so yeah, that wasn't too hard to see to the downside. I'm not saying that one should have been just sitting and sitting down and calling everybody, telling them the stock was going to go down like whatever 80%. No, but technically speaking, it wasn't hard to foresee that it wasn't likely that they were going to have great numbers. I would just chime in with one thing here, and it's funny that you bring these up. So the first one was a nano cap. This one is based in just a pure exploration play, right? If you're looking at the sector doing well and then expecting these things, and I'm not talking about these two names per se, but names like this, and expecting them to follow the sector as well, that's not something I would personally look for or expect, because these are literally just pure alpha plays. And especially and we're going to talk about warrants as well. If you have warrants involved in their share and capital structures, they start and they generally they perform and they move completely on their own accord, basically. Like, they don't care where the sector goes, either up or down. Like, you can have exploration stocks that don't even trade. Like, for example, in April this year, when the first, say, Trump wave of problems started in the market, I still own this stock, and we'll probably mention it later. But in those 3 or 4 days of like total market turmoil, this thing traded like 1,000 shares, and it's like at that point it was like 80 million market cap or so. So you have these things that are completely in one way or another insulated, in a bad way or a good way, of course. It depends, but are insulated from the market. And we did mention before that I actually like these, but they are a double-edged sword. They can be a double-edged sword. That is.
Yeah. So you're right. I mean, your point is that like these companies don't have a resource. Well, actually, in the
For
case
example, yeah.
of the one, they do have a resource. The Alwyn project, but it's small. It's like 1.5 million
Mm-hmm.
tons at 1%
Mm-hmm.
copper. So
Yep.
the market is basically saying these projects are not economic yet. They're very risky. They're very, they need more drilling, obviously, and they're not going to follow the gold and silver price, like maybe like a silver explorer that actually has a resource and
Mm-hmm.
has results in 2025. And the results are good, right?
Right. No, agree.
Okay. Let's move on and talk about financings across the sector. And your particular topic is warrants. What are you seeing out there with the financings that we've seen in, let's say, the last 3 or 4 months across the sector? And are you starting to see a trend of companies doing private placements without warrants?
Honestly, I think it doesn't deserve to be called a trend yet. But what I have noticed in the last 12 months or so are some, let's say, anomalous comments from insiders of companies. And I'll give you one concrete example of us. And this company had a successful exit recently. I really like how they have done. I never owned it, but I have noticed some changes in the last year where I think and I'm being maybe too optimistic here, but maybe we have managed to kick off the warrant hate at least a little, because I think just the market culture first, at least to an extent, has to change on the Canadian side, and people have to understand that it's just not a good instrument, and we're going to get to why and how and all the nitty gritty stuff around this, and I have some thoughts, but I think the slight warrant hate has uh, the seed has been planted, so to say, right? I'm not optimistic that it's anything big, but we have seen some quote unquote live financings, and in my mind, they should just be called normal financings in the market, where you just have shares issued with or without a discount to market, and it's just the stock keeps on trading. There is no nonsense around it or anything like that. We have seen that, and I hope that this is a trend that is going to keep going, because and everything that I'm going to say and that I just said, I'm not like some 28-year-old guy talking out of my ass because I'm mad that I don't own warrants. I do own warrants. I don't want them per se, and I owe them in like 2 or 3 companies right now. The fact that I don't want them and that I didn't ask for them is a different topic, right? So I'm not coming from that standpoint. And what I meant with this, not to digress again, is the ASX, everything, I just said, and I'm going to say the ASX already does it. So I'm not talking about something that is like utopia, or something that is not doable or whatever. The ASX already does it. 95% plus of the deals are done without options/warrants, and they have other rules in place that make it a more fair and more real market. And coincidentally, I don't think that for example, you have ASX nanocaps that have much more trading liquidity than Canadian nanocaps. And nanocaps would be an extreme example, but if you want to figure out how something works, how a system works, you take the extremes. You take the extreme to the downside, to the upside, and see what might be in the middle. But I think not having warrants in the share structures makes the public market more real, and makes it a more relevant mechanism. So yeah, we can get into all of this, but I'm just going to stop here. I assume you have maybe some questions before we continue.
Yeah, I mean, so there's a lot to unpack here. So look, the junior mining sector is a very high risk speculative sector. We can all agree on that. We can agree a lot of these companies are trying to prove something up that is most likely a long shot.
Correct.
We can all agree on that. And as investors in the sector, if we're going to gamble, speculate on these stocks, shouldn't we get more upside in the case that they have good results and actually the thesis is proven out and the share price appreciates? Like, shouldn't we get the opportunity to experience really large gains that are obviously enhanced by warrants?
Right, but there's literally a built-in inherent problem in what you just said instantly, because you are discriminating against people who are not in those private deals. Why? Let's say you are doing a private placement, right? And I'm not picking on you personally here at all. By the way, I already said I own warrants, right? But why are you, as an investor, supposed to be privileged over a person who already owns stock and is not doing the private placement in a company? Why are you supposed to get that?
Well, I'm playing the devil's advocate here. I'm actually not arguing for warrants. And actually, I don't think I have any warrants right now for costs. I think they all expired worthless. I actually don't think I have.
So that's another ridiculous part. People say, we need warrants, and most of them expire worthless anyway.
Yeah,
so
I would say I've had warrants in maybe 10 companies in my life, and I think only one of them came into the money. So it's like 90%. It's like 70 to 90%. They're going to be worthless at the end of the day. But the one time of those 10 is like a 10x, and it was very good, right? It kind of paid for all the others. So why? Let me ask you. Let me respond to your question. Why should somebody who participates in a private placement get warrants when other investors who just buy on the secondary market do not get them? Well, number one, usually they're investing.
The public market is supposed to be the primary market. If a company IPOs and you have the stock market, that's supposed to be the main market where a price is formed.
Okay, so the primary market. We call it the secondary market because the company is private at first and then it goes public in the secondary market, right?
I came here from a different aspect.
Yeah.
I get it.
So, and in the past, it's always been there's a 4-month and 1-day hold on private placement stock. So,
which is arbitrary, by the way. Makes no sense
it's arbitrary, but generally speaking, the people who participate in the private placement are generally putting in more money. So they might be investing $50, $100, $200,000 at a time.
Right.
And they're locked up. They cannot touch the stock for 4 months and 1 day. So to compensate them for being locked out of trading their stock, they get a half warrant to give them more upside and incentivize. It's all about incentives, right? So the company is giving them an incentive to invest in the company.
Right. So here's a extremely fast and quick rebuttal, like 2 points on that, right? So number one, when you're participating in a private deal, in a company that trades publicly, right? You acquire a block of shares at a preset price without having to go to the market and bid for those shares. So you are already privileged. Like, that's privilege enough. So that's number one. And the second point is, again, why are you supposed to gain that derivative instrument over somebody who already risked their capital prior to you coming into that deal, right? So and we can get to why the instrument is inherently faulty as well, but we're going to get to that in a moment. So that would be a very very quick rebuttal to what you just said. And I don't think there is, and again, like the guys on the TSX, they already do this, so we're not proposing anything otherworldly here.
Yeah, I mean, look, I'm American.
Oh, and by the way, I'm sorry. Regarding the 4-month hold,
Yeah.
there's a very simple solution to that. Just get rid of the hold, and then you don't have the guys who are asking for a warrant. And you know what's funny? All these long-term investors and whatever, they are the same ones who say, I'm not going to hold a stock for 4 months unless I get a warrant. So are you an investor or you're not? So do you want to hold the shares? Do you not want to hold the shares? I mean, I've been through this exercise so many times. I've raised money for companies, not too many times, but when I say so many times, that I had many conversations, right? But a couple of times I've raised money for companies, and I talked to people whom I consider to be knowledgeable and serious investors. And in a span of 24 hours, if you change the conversation from this deal is going to have warrants issued and this deal is not going to have warrants issued, you're going to have very different takes on your pitch on the company. So it becomes pretty ridiculous. And yeah, so just get rid of the hold, right? That would be another very, very, very quick rebuttal to what you just said. Why does the hold even exist? And you and I mean, we already agreed instantly that the 4-month hold is completely arbitrary. It doesn't pertain to what the underlying company is doing, and every company needs a different time frame before they give you. It's cliche at this point, but before they give you an answer to an unanswered question, right, with your money. So get rid of the hold, and there you go. There's already one less reason to even think about wanting or needing to own a warrant, right? I mean, I already publicly proposed a very simple solution for this, and it's like, if you want warrants, great, you can get them, right? We're not going to want to ban a financial instrument. That's kind of sounds not good, right? But what you can do, you can regulate it into being into making it a more level playing field, and at the same time making it, for most people, making it unpalatable. And there's a very simple solution for this, and it's like, if you're going to hold warrants, as long as you have the warrants, your shares are going to be locked, so you cannot sell the shares. And if the Canadian market introduced this, you would at least guarantee that the investors could take the warrants are either forced to hold the shares or forced to exercise the warrants in order to sell the shares. And in that case, the company is at least going to have that extra cash coming in from the warrants, right? So there are very, very simple solutions for this. And again, what I'm just talking about here and proposing here, it's utopia, because none of this is ever going to happen, because the incentives in the whole industry are going in a completely different direction. If you had a more level playing field, there would be less money raised, there would be less deals done, which likely means there would be less venture companies. And by this, all venture capital, there would be less companies. The exchanges don't want less companies. They want as many companies as possible on the exchanges. And the sell-side industry, which is very prevalent in Canada, a part of the industry would completely go out of business, because there's a big amount of people who cannot close a deal if there are no warrants involved. So the incentives go into a completely different direction, and this is never going to happen. But at least what we can do is, as investors, as participants, can think in a different way. We can avoid companies that cannot raise money without warrants, for the most part, and at least try to save our own brain power and our own money by doing that. So you kind of try to vote with your feet and hope for the best, and by the way, the company that I brought up, their CEO was in an interview before they got acquired by IAMGold recently. It's Norton Superior, right? And at the end of the interview, it was, and I'm sorry, I forgot the CEO's name here.
Simon Marcotti.
Right. And so at the end of the interview, he said, "Hey, look, we don't really have warrants anymore in our share structure. Now the stock is finally going up. It can finally go up. Now we have actual price discovery, right?" And so this is coming literally from a CEO of a company, whose stock finally went up on a per share basis, right? And why again? What I just brought up here, why it's again, I called it a market strong instrument publicly earlier. What it's very simple. If you have an instrument that incentivizes or even allows price insensitive selling or buying, by the way, but in this case, it's selling. If you have an instrument that allows price insensitive selling, well, that's the opposite of market functioning. You literally have an instrument that has a part of the shareholder base is just going to sell stock, no questions asked, at whatever price, and keep the derivative, right? And what's even more ridiculous, you have some old timers in the sector who teach people that they should just do the deal because they get the warrant, and then they just sell the shares after 4 months, and then keep the warrant. This is literally not capitalism. So it's the opposite of capitalism, and you're just asking to be treated preferentially over people who risk actual capital and who were in the who were shareholders of whatever the company we're talking about, who were there before you. So it's completely ridiculous. And there is, in my mind, there is not a single positive argument that we given for it. Even the ones where you assume, let's say you finance at 50 cents, the warrant has a strike price at $1, the stock goes to 150, right? And you say, okay, the $1 warrants are going to be exercised. Therefore, it's a quote unquote free financing for the company, right? Without paying for the fees and whatever. Well, that's also nonsense, because if the stock is trading at 150 and you have that quote unquote free financing at $1 per share, which is the warrant strike price, I mean, that's not a cheap financing, because you are literally raising money at a 33%
it's costing shareholders
lower
33%.
price than correct. So that's also a pretty ridiculous argument. And this is, by the way, a strawman argument as well, because you are purely assuming that you have success, and the stock went up 3 times from 50 cents, right? And yeah, it's we could go on and on, but
no, I like this conversation, because I've never had this conversation before, and nobody is as passionate about
because
it
nobody
as
cares.
you are. Yeah,
cares.
well, so it's interesting because you're an outsider in Serbia, and you see this because you've spent so much time thinking about it. You see how it affects share prices and market caps and company valuations and investor perception, and you've decided it's an evil, it's a net negative to the industry. But the Canadian junior mining sector has been established for 100+ years, and all of these capital markets in Canada, Vancouver, Bay Street, House Street, they're super entrenched. So there's no way they're going to
100%.
reshape this. They're not going to get rid of flow through. They're not going to get rid of warrants. They're not going to get rid of all the entrenched interests across the sector. It would be like asking JP Morgan Chase and Bank of America to stop pumping Tesla, right?
Yeah, and here's another slightly funny point. And it's pertinent to this, but you know that there is kind of a silent rivalry between Canada and Australia and in the mining sector, on the mining side. I asked multiple guys at recent conferences a very interesting question. How many Australian royalty companies can you name for me? Do you have a favorite Australian royalty company?
What are you asking me?
Yeah. Do you have a favorite Australian royalty
No,
company?
I've never heard of one.
Exactly, because they do actual mining, because they do actual mining. And so yeah, I mean, that's how it goes. I have zero illusions that this is supposed to change anything or whatever. I'm not, some kind of delusional Puritan or whatever. I'm just saying that this doesn't work properly, and people should generally, on average, be looking to invest in companies and looking at people who can raise money.
So let's get to the root of it. Okay, let's get to the root of it, because the brokerage firms have their incentives. The brokers have their incentives. the analysts are paid by the investment banks that do the financing deals for the company. So it's all structured there. Let's go to the corporate level. So the companies, the
Yep.
warrants don't get issued unless the CEO and the board want to issue the warrants. So what
Correct.
do you say to the corporates, to the CEOs, to the board, the management teams in the sector? How should they think about warrants and how should they think about their financings?
Well, to be honest, at this point, I think I usually, at least recently, I have been only in contact, and I have pretty much only invested in companies that are run by people who understand that warrants are not good, right? But what do you tell them? I wouldn't approach this from this standpoint on how you ask it. I would actually say that every company is a lifestyle company, okay? Because fundamentally, the number one job, however incentivized, however good management is, the number one job is to keep their job, right? And so as an investor, as an equity holder, who usually ends up as a martyr, in mining, as an equity holder, you need to have an independent thought and need to have your own brain and understand that there are some, there are really bad market circumstances where in Canada it might generally be impossible to get any capital, right? Especially if you're earlier stage, which nobody cares about, nobody reads these things, and then there are circumstances where it's so bad for you that you just have to make some decisions and do some stuff that is not ideal, right? But at least you can make sure that you are doing things as well as possible, right? Now, what do you say as an investor to company insiders? Well, it depends. Like, are they even listening to you, right? What you generally say is like, if you agree with what we just what I just said, right? You say that you prefer if they could if they could raise capital without these things. And I mean, generally, you should also insist on finding out as much as possible about. I mean, again, the smaller the company is, the more relevant this is. You want to know who owns the stock. How was the company founded? Were there and sweat equity is totally fine. It's just about how it was issued, why it was issued, to whom it was issued, and so on and so forth. So these are the things that I would be paying attention to.
Yeah, you know what bothers me is not the early stage companies that give out warrants, because like a $10 million market cap explorer that's drilling a completely greenfield target. It's so speculative. I understand they have to incentivize people to write checks. I don't fault the management teams of those companies at all. I think they're doing what they have to do.
In most cases, you're right.
Yeah,
I would agree.
but
Yeah.
what I do fault is like the $400-500 million companies that actually have coverage, that actually have credibility.
Oh yeah.
And then they're doing these, like, I've seen some financings this year. I'm like, why are they giving a warrant? Like, they don't have to give a warrant in this financing.
They don't care, and the comps for executives in these companies are usually like, I don't know, like I don't have the data obviously, but $400K plus a year. Most of these people don't give a shit, and this is where they don't give a shit about per share value and per share equity returns. So this goes back to what we already talked before, if you recall, when we talked about insider buying, right? And this is also apparently some kind of a holy grail that people like to look at. And this, I may sound like a complete asshole here, but when I see an insider buying, I always ask, is this guy a bit better investor than I am? And again, at the risk of sounding like an asshole here, I usually say, no, he's not a better investor than I am. Therefore, I don't care that he's buying the stock, right? He can be an insider, but I don't care. Like, it's not a signal. And so in the same accord, most of these people, I don't think they care that much about per share equity returns, which is what equity holders is everything that we look for and look at. And oh, by the way, it's much easier if you are okay, I won't bring up any company names, right? But let's say you are supposed to build a mine soon and it's a raging bull market. It's much easier to make 2.5 phone calls and say, yeah, you sure do the half warrant on the deal, and they can, like 2 or 3 banks can do like 100 million bought deal for you in a matter of a week, rather than getting on a plane and going to London, to Toronto, to Vancouver, talking to a bunch of funds, talking to a lot of people, and trying to get as good of a deal as possible for,
Yeah, I think that's
you
right.
know.
Yeah,
So
like I think you
that's
just
how it goes.
diagnosed it. I think that some of these management teams would just rather have the brokerage firms do it all for them. The brokerage firms tell them what they have to give to get it done, and they say okay. And so there's no extra lift to try to get better terms for shareholders. It's just
Correct. And
okay.
at the same
You know,
time,
we
at the
need
same time,
$30
just
million.
go on.
Get us $30 million
Mhm.
and tell us, what the terms are, and we'll say either yay or nay. And the brokerage firm comes back.
And it's basically never nay. Yeah.
Yeah. Well,
And I
yeah,
mean,
they might
we're
push
not the only
back a
ones
little bit.
mentioning this. Right,
Yeah.
right, right. No, I fully agree. At the same time, I just want to take the other side, like play devil's advocate against myself here. So again, I'm not. This is not some kind of an idiot complaining about things being salty that his stock went down or whatever. I totally get that there are situations where you actually want to quote unquote pay the street, and there is this saying that goes around. It literally goes like pay the street, right? And when you pay the street, you're going to get coverage. You're going to get talked about at dinners and lunches, at meetings and whatever. Um, and so it's kind of like an informal bribe, right? And this totally makes sense. You want sell side coverage. You want marketing help. You want connections, because even if you have like an egregious example would be like, let's say you have 5 people, and nobody has this, but I'm just saying this to exaggerate. Like you have 5 people in your company who are there to bring capital in, bring investors in, and generate buying on the market, right? Even if you had this, you can't do it. You probably can't do it as well as unless you are, I don't know, somebody like Robert Friedland, right? You can't do it as well as 3 or 4. Let's say 3 or 4 Canacords, right, or 3 or 4 whatever big sell side firms. So you definitely want to do this, but to your point, when it comes to saying no, pretty much on certain terms, or in certain situations, the no pretty much never gets said, because again, because of the reasons we already mentioned.
Very good. So just to put a bow tie on this, so what you're calling for is, if company wants to raise money, just do a life financing at whatever market, or 5% under market, or 8% under market, with no warrants, done deal, stock trading immediately, done.
Correct. And that would be, again, it's nothing otherworldly, and the SX already does it, so it's not rocket science. And another thing is, there is again a very simple solution, regulatory, from the regulatory standpoint. If somebody wants to have the warrant issued in the financing to him, perfect. You just have to keep your shares are locked as long as you have the warrant. So if the warrant expires in 2 years, and you never use it, your shares are locked for 2 years, and that's pretty much it. The whole saga gets solved in one stroke. And yes, the whole point of this is like to make 80% plus of people who want warrants not want them anymore, and that's pretty much it.
Yeah, it makes sense. I mean, the first time I saw private placements in the TSX-V, I was like, this is weird, because I come from the U.S. where we don't in the we call it the
Mhm.
secondary market, like Nasdaq. They don't do this. It's not really done this way, and it's certainly there's no warrants involved. It's a financing. You just get common stock, done deal. Um, and so when I saw this like 4-month hold stuff and these warrants, it was weird to me. But then I just became accustomed to it, because that's the way it's done in Canada, right?
Mhm.
Let's move to EMO on the TSX-V. So this is an interesting topic. So this company has VMS deposits in Spain in the Iberian
Mhm.
Pyrite Belt. And it came to my attention in 2021. And I think anybody who's active on the venture and follows the junior mining sector saw this stock, because it had literally one of the most incredible charts in 2021, like a year that was generally not great, especially the second half of the year for the sector. this stock was like a 15x, right? It was like 25 cents to $4, and it had the most traffic on co.ca. I mean, there were regularly 300-400 people on the channel. Like, there's only 1,000 people on the whole website. There's 400 people on the emo channel.
Hmm.
So it's crazy. And what really grasped investors' attention was the fact that there's a story that they could win the award for a past operating mine. There's a large, VMS mine here that had an accident like 25 years ago. It shut down for environmental reasons, but it's a great deposit. It's a big ore body. We'll call it AZN because I don't want to say the whole word in Spanish. I probably won't say it right. And they could win this tender. Basically,
Hmm.
the mine, the project went up for tender by the Spanish government because they decided, well, we're going to actually get this back into operation. It's not a fatal flaw in the deposit or the project or anything. And another company won the original tender, or it was awarded to a different company.
Yep.
But with emo, they decided that it was not properly awarded. There was some wrongdoing involved. And I'm not going to go through the whole story because it's very long and quite tired. But anyway, this
It's a
whole
saga, yeah.
idea that they could win this asset in a court case essentially came about. And the pie in the sky got very big here. And I think this company at one point was close to $1 billion market cap in Canada at the peak. I think it definitely got ahead of itself. But
Hmm.
anyway, so it's been a saga for 4 years now. And then just literally last week, criminal court in Seville, Spain, did not find anybody guilty of any wrongdoing in the awarding of the tender. And the Emerita share price dropped from 136 to a low of 39 cents. Now it's at 53 cents. So what's going on here, Vuk?
Well, I mean, nothing's going on, and a lot is going on at the same time. It depends from whose shoes you're looking at the situation. But this has been and was one of those super easy to avoid. I call them losses, right? It was almost a guaranteed loss if you really looked into it. But even without looking into it, and I'm just saying this from my own standpoint, I have certain rules that I just enforce without too much thinking when assessing situations, assessing companies, and whatever else one might get pitched on, right? And one of them is, I don't bet on legal outcomes, and the very simple reason is, can I gain an edge in in multiple different legal outcomes, and can I do like three positions that are all legal processes, and can I figure out how to win one or two out of those three or something like that, right? So number one step that what a retail investor should have realized here, maybe this year, maybe years ago, whatever, is most of the market cap is carried by the market's expectation that the company is supposed to get the Azan Collier project awarded to themselves instead of the Group of Mexico, right? So therefore, the instrument, which is in this case the stock, the financial instrument, trades almost purely based on this expectation, um, and that is what is going to determine whether or not I have per share returns in the future or not, right? So that's number one. What does control the instrument, right? Number two is, can I, and it's a cheesy word, but can I predict what the outcome of this factor that controls the instrument, what is the outcome going to be, right? And in most cases, for legal processes, it's a no, right? And I mean, even at the billion market cap, maybe it didn't even matter if they got the project, right? Because what was the upside from there? And not to get into project fundamentals here at all, but this has been purely a bet on a legal process that went the other way, and there have been many yellow or red flags along the way to figure out that this was not going to go, in Emerita's favor. I mean, one of the last one I would say was the financing that was done and upsized 2 or 3 times recently. All the while the outcome of the trial was supposed to come any day, right? So yeah, why they even finance? Why are they doing a big financing if they're supposed to get the project? The stock was supposed to double or triple on that news, right? So if, let's say, 6 months ago you were like, yeah, we're getting this project, I'm going to buy the shares, you buy the shares, and the company announces financing like a month before or 2 months before the trial is supposed to end, and they upsize the financing like two times, I think. If that was me, and somehow at the beginning of the year I thought we were going to get the project, I would sell immediately when the financing was announced, right? Because that's a pretty good tell that something might be wrong. And this is just one of them. Another very reasonable one would be if you just, let's say, lost a legal process to Grupo Mexico. Do you really think that Grupo Mexico, that by the way already started working on the project there, because there's a cleanup required, the pit needs to be dewatered and whatnot. They already assigned the budget, or at least a part of the budget that's supposed to be allocated to that. Do you really think that Grupo Mexico didn't do their homework in Spain? So this is not in some whatever other country. This is Grupo Mexico in Spain. So there were many yellow, as I said, yellow and red flags along the way, to realize that this is unlikely to go in Emerita's favor. One of the most glaring things for me in this whole situation recently is anybody going to phone that? I don't know who did the financing. It was Canaccord and one or two other firms, right? So are any of the investors who came into that 20+ million deal going to call them on the phone and say, hey, you advised me to go into this deal and it's down like 75% 2 months later? So what's up, right? So is that going to happen? I don't think that's going to happen at all, because I don't know, people are too nice, they don't care or whatever. But that would be a very, very good question to ask, because if somebody pitched you, I mean, I know what I would do, and this is not even my job, by the way. If you and I talked over a beer or a coffee, right, and I told you like this stock is really good, I put $1,000 into it, you should put 5K, and it's down like 75% 2 or 3 months later, I would literally call you on the phone and try to explain myself, right? But this might be just me. So that this, and I haven't seen this mentioned at all. All I saw is that Canaccord still has a price target that's based only on the Iberia Belt West project. So therefore, the game is still on, and all the retail martyrs are going to keep holding the stock. So yeah, that's what I think about the whole situation.
Yeah, I want to be careful in what I say here, because look, I respect that there are a lot of retail investors who bought this stock and they feel strongly about their thesis, and like I understand that, and nobody's perfect in markets, especially in the junior mining sector. It's tough, and we all make mistakes all the time, and some things are unpredictable for sure. There's no doubt about that. In this one, I'll just point out a few things. I think what you said about when it got to like 850 million market cap at the end of 2021, like how much upside was left, And I know some people were saying there was a lot of upside, but I think there's a big lesson there. You haven't even had the event catalyst happen yet, and the market is already pricing it in like it has happened. Like, how many junior mining companies get above $1 billion market cap ever? Like, what percentage?
Correct.
Less
That's a
than
very
1%.
very simple point, and it's on point.
Yeah. So
very, very
and we see this often, and this is where technical analysis and actually understanding how to look at charts and how to use charts in your investment process can be valuable. That stock went to $4.14 a share in late 2021, and then proceeded to drop 85% over the next 8 months. So the market was giving some signals there at the end of 2021 and 2022. The people that drive these share prices, the investors, the funds that move these stocks, that actually have the capital and flow to bring a junior to 850 million and then to drop it back under 100 million, we're telling you that they thought the company case was actually viable in late 2021, and they were betting the probability of an award or the award being taken away from the other company and granted to EMO was greater than 50%. And then something happened in 2022, and they said, nope, it's not actually happening. And you're probably not getting the cutting edge DD on the CEO.ca company channel. Right. I'm just letting you guys know, you're probably not getting the cutting edge DD. You're probably not getting what's really happening on there. And yeah, and there were some news releases. If you actually go back and look at the news releases, the company made a decision at some point in that time period. I don't have the exact date in front of me, but they said, we want to see the criminal court go through first. We want to see the criminal court trial and ruling happen first before the administrative court rules on AZN. That was a very important signal. The company would only do that if they were concerned that the administrative court was not going to grant them the tender. They thought there was a better chance in the criminal court for somebody being found, guilty of a crime, right? And frankly, there was some price action here in 2025. Clearly some speculation that the court case would go well, and then as we got closer to what actually happened, that the stock was in a small downtrend. It clearly, the market, the wisdom of the market was not betting that this was going to go in Emerita's favor. Like, that was very clear.
Agree. I mean, you approached it from a slightly different aspect, but 100%. I think so. There is a guy who, has been much more hands-on with this whole story for years. Honestly, I personally have not bothered with it too much. It's just something I sidelined from serious consideration of owning or not owning the stock, like literally late 21 or early 22 or whatever. But you should maybe get Adrian Godas on, because he knows a lot more detail about the company than I do. So that would be a pretty funny chat.
Yeah, that would be interesting.
Yeah,
but
he's Spanish, by the way, so that's
I read his.
He has a competitive advantage too.
Yeah, I read his short thesis, and just I'm not a Spaniard, and I actually don't even know that much about Spain. But I don't need to know much about Spain to bet that they were probably not going to take this away from a big Mexican mining company and give it to a Canadian junior mining company. I was just common sense, regardless. Right. I know that there was probably some impropriety. I think we can bet that there were probably some dirty dealings here involving the awarding of this project to the Mexican conglomerate. But is the Spanish court system really going to turn over the apple cart, here? I just, I didn't think it was high probability, and the amount of certainty and confirmation bias that I saw and read among so many investors in this was definitely a red flag. Let's move on to Torr metals, because this is something we've talked about before, Vukasin, and
I think we briefly mentioned Torr. If I know I mentioned it on Brian Lenny's podcast. It was also very brief, but I can't recall if you and I mentioned it before. I know we talked about it.
We discussed it privately.
Right.
We discussed it privately.
Yeah.
So this is BC Porphyry Copper Explorer that I think you were quite bullish on previously, but I read a tweet from you this morning that said, no, you're more, neutral on it, and you'd actually be a little cautious about some of the company news that they put out.
Yeah, I'm just seeing a lot of froth around the stock since the recent, especially since the most recent financing was done. That's part of the reason. The other part is the updates from the recent program they sound cool, but to me they sound a bit too sciencey. There are no core picks and there is no core description there. So I would be very cautious before we see the actual assays. And just for anybody completely unfamiliar, I don't have like a big history with the company or whatever. I just bought it last year at literally rock bottom, and I bought like over 2% of the company on the market, and so it was, I don't know, when I started buying it, it was like maybe 1.7 million Canadian market cap or whatever, and I just saw something that can re-rate on the basis of a nice capital and share structure, some money in the bank, and actually two legitimate exploration projects in Canada that it's legit exploration work being done, unlike a bunch of other nano cap Canadian juniors, which are mostly just recycled projects. So that's what I did last year, and that's how I got involved, right? And in the meanwhile, I just grew tired of how slowly everything was progressing, and let's say I wasn't seeing really eye to eye with the chairman of the company. So that's why I also said today in the post that a metals group vehicle wouldn't be my preference in the future. But I'm really fond of the CEO. I think he means well. They are quite decently incentivized to have this work, and I hope that it's going to work out. I just put that tweet up in case any of the guys who might have, even if it's like $500 worth of stock, if they bought it because of me, I just don't want to be any confusion here, right? So full disclosure, I'm not really enjoying the current upswing in the stock and whatever. So I've been out of it for not too long, but for a bit now, and I'm just happy to watch from the sidelines and see how it goes, and then maybe consider just chasing it up if it's really good, right? But my main concern is the ongoing fraud around the stock. I think there's plenty of people who don't really know what they're talking about, geologically talking about it. And
are you talking about me?
Have you been talking about it publicly? I don't think so. But and the other part is, like, as I said, the updates from the company are a bit too sciencey, like not no core picks and no core description. Might be just be conservatism from management, and just trying to keep things low key. So I might be completely wrong. We might get one or two discovery calls in January. So again, I'm not. To your point, you said you read my post as neutral, and that's exactly what it is. I'm just neutral, and just let's.
Yeah, you just don't want to, make it seem like you're encouraging a further, appreciation in the share
100%.
price.
Of course. Yeah.
So Torr was on my panel at Myth in September, and I did an interview with Malcolm in November.
Oh yeah, I even forgot about that. Yeah.
Yeah. So I do know the company reasonably well, but I must say, in the last interview I did with Malcolm, which is on my YouTube, he was teaching me something new about these porphyry deposits in BC, this supergene, oxidation that goes to depth, which is not a model that I'm really accustomed to or I've seen before. So I'm actually still trying to wrap my head around what they're finding at birth and really trying to understand. And obviously the assays will help a lot, but I think so there's 2 points I want to ask you about there. So you say froth in the stock. I mean, the market cap is 15 million, US. Like, how is that frothy?
Well, it basically doubled or tripled, right? So I'm just looking at it relatively. I'm not saying the valuation is super high or whatever, not at all. I'm just talking about the move, and I'm talking about, let's say, the vocabulary that's being used around it. And
okay, let's talk about that. He talks from.
No, I'm not talking about a CEO. Right, okay. I'm not talking about a CEO. I'm talking about just, if you see co.ca commentary, and again, I know some of those accounts, and yeah, so that's part of the reason. So this can be a good indicator at times.
The news releases recently are focused on, number one, expansion of the drill program. So they went to 2,733 meters in total. They were originally planning to do about 1,800 meters. So that's that's generally speaking not negative for a junior to expand the drill program. So that's one thing, right? And then the supergene system, it appears to be, based upon what I'm reading, and what Malcolm explained to me is bigger and extends deeper than previously understood. So, what are your thoughts about that?
Neutral, because I have not seen the core and I have not read the core description. And again, like reading core description would be much more valuable to me because obviously I'm not a geologist, right? I can see some stuff in core and I can say, okay, good/bad, but I cannot log core, so to say. But reading core description would be really helpful. And it's funny, again, not to fanboy ASX too much, but when you look at ASX updates, they they have to put in detailed core description into the releases if they are talking about a core. So that's for me at least, that's another SX plus, because there are many, not many, but there are certain call them certain geologies where from purely core description you can figure out if it's commercially good or commercially bad if you know what you're reading, of course. But there are geologies where you can literally from core description you can quite easily figure out if it's if the program is going well or not. So again, not to digress, but a quick answer to what you just asked is neutral, because I don't know, right?
Yeah. So basically, like, my take is the tone of the news releases since October are positive. Malcolm's body language is positive.
I agree.
The share price action is positive. But point well taken. How many times have we been disappointed with assays where, there was some speculation the drill program went well, seemed the CEO was positive, and then the assays just dropped and they're not impressive at all, right? So, what I'll be looking for here with the Bertha drilling is to demonstrate some scale, not a limited high grade, super gene occurrence, but actually, some porphyry type scale where we could talk about 100 million tons or 200 million tons or 300 million tons. We could actually start to put some numbers around how big this could be.
No, I agree.
Yeah. So we'll wait for assays, and then it's okay to be cautious. So I guess the final topic here, we can sort of end on this. Is there, sort of end of the year thing I like to do often is ask people what was a big mistake you made in the last year in 2025. Like, is there something that stands out to you, like a big lesson that you learned, like an episode where you had a loss and there was a learning experience from it, and then what would you like to do better in 2026? So like a two-part question.
Right. I think most mistakes I made this year are, again, same as last year. It's mistakes by omission, right? So I'm hoping at the same time, obviously, I'm hoping to improve at that. There are some hands-on examples where I would say, okay, I made a mistake that I didn't buy this earlier, right? But just generally speaking, if you're not mentioning any tickers and whatnot, it would be this. I had mistakes by omission that were, and not just in hindsight, easy bets, but that were, looking ahead, relatively easy bets as well. But I maybe ignored them because for example, this year it would be I wasn't bullish enough on the market generally, right? I mean, by the way, I don't think anybody has been this bullish on the market, right, this year. But so I still think I'm going to beat the GDXJ probably, likely this year. That's fine. But there, I maybe or likely could have done it in an easier way, right? So mistakes by omission, and this is the same thing that I would maybe try to look to rectify, right? And practically it would mean figuring out something that we already talked about before. Easy doubles, easy triples, something that you don't have to worry about 4 or 5 different factors in the store. You just have to worry about 1 or 2, and stuff like that. That's something that I would think bring up as the main lesson and the main goal going ahead. And I'm sure I'm going to, just as anybody else, I'm going to keep having mistakes by omission. It's just how it goes. And they are I think much better mistakes to make, where you don't make a return or you don't make enough of a return rather than having a loss, right? One thing, I think one mistake I made was, and again, this is the only, I mean, I assume you don't want to bring up any tickers, but just because of the practical example, I bring up TDG here. Again, it was a very small drawdown of like 10 or 11%, but I did buy a bit more TDG than I should have bought, it's funny, but at the same time, it's kind of an example where, you know, brownfields exploration is not really less risky than greenfields exploration. This is a whole different topic that we can get into, but that was a mistake, because I kept buying after my initial 1, 2, or 3 stakes, and if I had just kept it at that, even with that drawdown, I would have ended up with a positive trade in like 3 or 4 months. But in the meanwhile, I kept buying and made it a slightly bigger position, and then when it pulled back on the news, then it ended up in the red. So that was a mistake, not by omission, but an actual mistake, right?
Yeah, are you still
So
long
I
that
would
one?
also bring it. No.
So the drilling there at Shasta was not to your liking. The drilling
Well,
on the
yeah.
other side of the property.
If you're not looking at this on a, call it on a quote unquote spreadsheet basis, where you say, look, you know, the Aurora pit is definitely going to go over to TDG's side. They already have over 1 million ounces at Shasta. They have some quote unquote brownfields disturbed ground that is probably going to be easier to permit. And if you don't look at it on this, call it, you know, value basis, what is in the near term, and what was completely controlling the stock, the main factor for it was and I think still is, by the way, can TDG take sit behind the wheel and control the district, right? Because the AMARC is not in the driver's seat. Even, you know, they are part of a basically tier 1 discovery, but they're not in the driver's seat, and everything on TDG side is 100% owned, right? So could have TDG taken the primate in the district? That's something that would have probably double the stock from about 400 million Canadian market cap. So that was the question. And how you take this primate is, well, you just yeah, I mean, that first call that they put out, you bluntly put, you just have more Aurora stuff on your side, right? Aurora in terms of quality and grade. That if you have an Aurora on your side, not necessarily in terms of size, but that quality, and you already, by the way, have over 1 million ounces that are quite economic right now, and that are probably going to grow. And you have an undue target in Newberry and whatnot. So this was the main story, right? And when they put out the results that showed that they have the let's say the weaker part of Aurora, they lost that primate, and that's why the stock traded down so hard. And so that was the main factor, right? At least in my mind. And once that part of the story is gone, I'm not really that interested anymore. I can do the value calculation and how it makes sense, but yeah, I don't want to sit in this for like 3 or 4 years. So yeah, that would be a quick take on TDG.
Yeah, I actually find that one interesting. I don't own it, but I've been looking at that. What do you think about the VMS project that they have in BC?
I'm not sure we should get into this in that, but I was literally about to bring this up as well. So another reason why and this is just personally me, N equals 1, I'm not inclined to hold the stock of a company like that, and I had some public commentary around how the company is run earlier, and despite all of that, I still bought the stock, and I wanted to succeed, but I think that that was a bit of a nonsensical deal, same as the Sophia project that is close to close to Shasta Newberry, that is not being worked on at all. And I think those deals were just done to wind in certain people into TDG's equity after the Aurora discovery was made. And it was not in the interest of long-term TDG shareholders.
I see. Okay. Interesting. And then I don't know, I guess like final word on 2026, like, what's your outlook? What's your focus? going into 2026?
No, it's not. Fortunately or unfortunately, it's definitely not changing. It's copper and gold. I think we're a new world, and call it a 3K plus or 3.5K plus gold world. Even if we have a meltdown or a serious pullback in gold, I don't think we're going to go below these 3.5K levels, right? So I think it's a completely new world now, and there are some if you want to take a bit more of you're still kind of looking for something that is going to have a nice upside. I would be looking for developers that are just needed a bit of a higher gold consensus price to just go ahead and get built. These are things that I would be looking at on the lower risk end. So yeah, nothing's changing in terms of strategy, just copper and gold. I'm maybe a bit worried about copper's upswing recently. Not to talk copper macro here too much. I do have some contacts that do commodity macro extremely well, so I listen to them. Yeah, I have a slight reservations about the current upswing in copper, but more power to it. Honestly, the higher it goes, the better for us. So that's all fine. But yeah, again, sorry, nothing's changing. It's just gonna be usually copper and gold, and mostly copper and gold, because that's where there's more than enough work to do there, and I think the best companies in the sector are there. So that's going to stay that way.
The copper chart, daily, weekly, looks great to me. I like it better than gold or silver even. I'm starting to get a little concerned about silver here, but just in the sense that it's so extended, but I'm not really seeing like the euphoria that would signal a top. I think there's just still so many people that don't own gold or silver, that have no exposure here, and they're all just waiting for a pullback, and it's not really happening.
Yeah, you're probably right, and I think the vast majority of the sector is either severely or slightly underperforming the GDXJ in GDX this year, because most people sold after the first 50% or 100% upswing. So yeah, I don't think, and this also goes from the recent conferences I attended. People are generally happy, but you don't really see any odd attendees, or you don't really hear any unreasonable takes or comments or something like that. One thing that I didn't like is I heard three or four acquaintances this year they told me, and these are just retail guys, that they told their brokers that whatever is a full warrant deal, they're going to do it. So not to drag the conversation onto warrants again, but think about this. You literally have people like no questions asked. If it's a full warrant deal, I'm doing it in this market. So that's how good of an instrument it is.
I think we'll leave it there. Vukasin, thank you for your time. This was a great conversation. This will stay up here on X for those who want to listen later, and then it will make it over to my YouTube by early next week. Thank you.
Awesome. Thank you, and definitely looking forward to the next time.
Cheers, guys. Thank you.
Cheers.